Hey, I'm back with you with another video. Listen, if you're on this page, you probably are curious to know what insurance underwriters really evaluate and what they really look at to determine what kind of pricing they actually give for your insurance program. And it's not a lot. I can't get into everything, obviously, in a short video here, but below you're going to see a lot of those things. And I mentioned this and I referenced this in one of the earlier videos, that there is about 20 core areas that insurance underwriters evaluate. And it's different for every business. So clearly, if you're owning a building, clearly they have concerns about hazards such as housekeeping or flammables, or things specific to the property, the sprinkler system, whether or not that's up to date, whether or not it's inspected regularly, if it has spark detection. And there's so many things that this video can go on and on and on and on. But there's things pertaining to auto insurance or auto liability, I should say, or general liability and professional liability, and the strength of your contracts that you have with your subcontractors or people that work on behalf of you. There's things pertaining to workers' compensation, and there's things outside of that, even if you get into the cyberspace and the employee theft areas. And there's a multitude of different areas that they dig into. Below is just a snippet of some of those core areas. But I want you to understand something. Again, I referenced this before. Insurance companies are a for-profit entity. Their number one job is to write profitable business for the insurance company. The product that they're selling is your insurance program. And at the end of the day, the more that you can improve on these core areas that I'm mentioning below, that I'm mentioning here and listing some of them below, the more that you can improve in these areas and the better that you can showcase in these areas, the lower the perceived risk the insurance company thinks of you. And the lower the risk that they perceive you to be, the more aggressive they can get with pricing. Again, I told you before, it's not rocket science. If you really just stop and think about it, they want to write profitable accounts. If we can show them that we can be profitable and that we're best in class, they will work extra hard to drive down the cost to attract you as a client, because you're the type of client that they want on their books. They don't want the type of business who's reactive, who doesn't do these things, doesn't understand the importance of them, because those are the businesses that are more prone to having insurance claims. AKA, insurance claims means higher cost for you, higher cost for the insurance company, and it's not a win-win situation. So when you understand their motive and you understand how to position yourself to improve your positioning and your risk profile from an insurance company's perspective, you will have insurance companies all over the place, very eager and aggressive to try and win your business. And competition for your business drives down your pricing. So again, I hope this helped. One last thing I want to say is insurance companies, again, they have about a 30% operating expense. So what that essentially means is you pay in your insurance premiums every year for whatever your premium is. Let's just say it's $100,000. And they pay out insurance claims based off of the losses that you have in that given year. Well, insurance companies have to fund for future losses that could potentially come forward after the fact, the next year, or so on and so forth. And they also have expenses. They have to put lights on in their building. They have to pay their employees. They have to pay agent commissions to somebody like myself. But at the end of the day, their break-even point is about a 65 to 70% loss ratio. And what that essentially means is as you start to actually incur claims and they're paying out about 65 to 70% of the money that you're paying in the form of premiums, you're actually losing them money. That is the fastest way to get insurance companies to drop your insurance or jack up the prices like crazy. But on the contrary, the better we can do to reduce that loss ratio and keep it low on the low side of it, the more profitable we are for the insurance companies. And when we're more profitable for the insurance companies, it puts us in a position to negotiate and get them to prove to us why we should stay with them versus going to another insurance company. And again, that's a strategy conversation we can get into later on down the road. But I just want you to understand the mindset shift, that you don't want to be in a position where you're just asking for quotes, asking for quotes, asking for quotes. What you want to be is you want to be the the business that shows that you're the all-star, that you're the business that everybody strives to be. And when you can effectively do this and you know how to position yourself in front of the underwriters who are evaluating your price, you're now in control of the pricing and not simply desperately just looking for the cheapest quote in town. So again, I hope this helped. If you have any questions, reach out, look below. You'll see a lot of the things that I'm talking about. There's so much more to get into. I obviously can't talk about it all in this video or list everything on my website, but if you have any questions, you want to continue this conversation specifically for you, reach out. My contact information is below, and I look forward to talking to you. Thanks, stay warm, and take care.